From owning a BTO HDB to retiring with assets worth 4.3 million by the time you're 65 years old. Sounds impossible or too good to be true? I'm sure you know of someone like a colleague or relative who keeps on buying properties even when prices are increasing every year. It seems that they are taking crazy unnecessary risks. Or maybe they are just crazy. But then, it also looks like they know exactly what they are doing because they make money every time. Do they have a magic crystal ball that predicts future prices? Or are their actions guided by a blueprint that is backed by years of solid data? So here's the thing. I'm not going to tell you to just go out and buy the latest new launch that is selling at an all-time high now. But what I promise to do in this video is to give you an exact blueprint of how thousands of Singaporeans have built a multi-million-dollar nest egg so that they can comfortably retire. Before I proceed, please note that this is not investment advice but for educational purposes only. Please do your own due diligence before you buy or sell any property. So stick around if this is what you are keen to know, so that you don't have to watch all your friends retire earlier than you while you still have to work beyond God knows when. And why should you listen to me? Hi, my name is Lil and I've been a property agent and also a property investor for the last 30 years. I've also helped hundreds of homeowners make six-figure returns in their property transactions. In fact, just last month, one of the homeowners whom I've worked with in 2021 was pleasantly surprised when I told her, hey, your property has since appreciated by 500,000. So at the end of this video, you'll find out where you are in your property journey and what is the next step for you to take in order to finance your dream retirement. Do you feel that things are getting more and more expensive and it's really hard to keep up? I'm sure you've noticed that a plate of drumstick chicken rice that cost only $4.50 a few years ago now costs $6.50. In fact, I just realized that my favorite brand of coffee has also gone up from $12.50 to $16.50 recently. Sadly, not only chicken rice and coffee, but the prices of our everyday items have been rising fast and will continue to do so. According to data by SingStat and URA, the blue line is the Consumer Price Index, CPI, which tracks inflation for the last 20 over years. Consumer prices have overall increased 40% in total. In other words, prices increased averagely 2% every year. But here's some good news. Look at the orange line, which represents the Property Price Index, and you can see that property prices have grown 100% from the year 2000 to 2024. So, property prices grows about 4% every year, beating the inflation rate of 2%. It is further confirmed in this report by HDB that private property prices has increased by 4% in 2024. So, if you had bought a 3-room condo in the year 2000 at 500,000, now it will be worth 1.6 million easily. But if you had kept the money in a bank, well, the 500,000 now could barely only buy you a HDB 3-room flat in Punggol. So let me give you another more concrete example. Let's say you've been thinking of buying a $2 million condo last year, but have been putting it off. In this case, what is the real impact of inflation? So we've already established that property prices grow at an average of 4% a year. This means the value of this property will grow 80,000. That means you have lost 80,000 this year if you had not bought last year. Also, the down payment for this property is 25% of 2 million and it works out to be 500,000. And don't forget that this year, inflation would have shrunk this 500,000 by about 3%, thereby causing you a loss of 15,000. So, the total opportunity cost of not buying that property last year has cost you a potential loss of 95,000. Well, you must be thinking, yeah, I know all about inflation and how buying properties can hedge against inflation, blah, blah, blah. But with all this instability and chaos going on in many parts of the world, the property prices may correct or even crash. So I may as well just wait and see, right? My dear friends, this is exactly how I felt for many years. I was thinking, prices are so high now, why should I buy now? Whatever goes up will come down, right? Only fools rush in. I will only buy when prices crash, right? Let's look at what the reality is. If you look at the chart, you can see how the property prices have reacted when we face all these negative world events like the trade war between China and the US, the Ukraine war, etc. And not forgetting that at the same time, the government have also continued to impose more and more cooling measures from time to time. You can see that the property price index just goes upwards slowly but steadily and refuses to crash. Except for the year 2020 when there was a pandemic, it dipped a bit more than usual, but after that it soon bounced back and went up, and the rest is history. And I also asked myself this question: you mean Singaporeans are also rich? Well, frankly, I don't think so. But however, the data says otherwise. From the year 1995 to 2025, household wealth has grown from 0.25 trillion to almost 2 trillion. This is about 8 times, right? According to a news article by the Edge Singapore, the UOB head of research, Mr. Swan, said that rising income, marriages, and cash-rich households has been driving Singapore property demand and will continue to do so. Since inflation makes prices go higher and higher whether we like it or not, why don't we turn the tables on inflation and make it work for us instead? Meaning, we buy assets which prices will keep on increasing and we benefit instead of suffer and complain like everyone else. So I'm going to show you 3 couples who started with the HDB BTO, and here you can see which couple managed to make inflation work for them to build their wealth to 4.3 million when they reach the age of 65. Maybe you can also tell me which profile you belong to. Profile number 1 is Mr. and Mrs. HDB Forever. Mr. and Mrs. HDB Forever bought a 5-room BTO in Punggol in the year 2000 and have been living there ever since. When prices rose to about 471,000 in about year 2010, they felt they just want to pay off their loan in another 20 years and just live there forever. After all, they are very comfortable, and although their salaries have increased, they see no point in upgrading to a condo because they don't need the facilities. Prices stayed pretty stagnant, and in the year 2015, the price was still around 450,000. Fast forward to this year 2025, their flat has already appreciated to 658,000. Being in their 50s now, all the more they don't want to and also cannot qualify to take a loan to upgrade to a 3-bedder condo, which will easily cost 1.6 million. So come year 2035, most likely the HDB flat will appreciate to about 887,000. This is projected by estimating a 3% price increase every year using Singapore's yearly GDP growth rate. So here, we are more conservative in that we are using the 3% GDP growth rate and not the 4% growth rate from the property price index. Okay, let's go to Profile 2, Mr. and Mrs. Upgrade. For Profile 2, they too started like the previous profile. They bought a HDB BTO in the year 2000 and subsequently decided to sell it in 2010 to upgrade to a condo. The purchase price of the 3-bedder condo in 2010 was about 890,000 and they have lived there ever since. The last transacted price of their condo in 2025 is 1.488 million, and they felt that they shouldn't stress themselves out, and so they will live there till 65, when they will retire before they decide what to do. So taking the 3% annual rate of increase in property prices again, how much will their condo be worth when they hit 65 years old in 2035? By 2035, their condo will be worth 1.98 million. However, the rate of growth may be slightly slower because the condo will be more than 15 years old. Many property experts and also data has shown that the rate of increase in property prices slow down after the 15-year mark. Now, let's look at the third profile, Mr. and Mrs. Invest. Their path is represented by the blue line in the chart. I've included the orange line to represent Mr. Upgrade and the grey line to represent Mr. HDB Forever. Their path is similar to Mr. HDB Forever in that they also started with a BTO, and like the second profile, Mr. and Mrs. Upgrade, they also upgraded to a condo in 2010. Let's go through the timeline. They bought a HDB BTO in the year 2000, and in 2010, they upgraded to a condo that cost about 900,000. In 2015, their condo appreciated to 1.2 million, and in 2025, it appreciated to 1.612 million. So we can project that when 2035 comes around, that condo will be worth 2.167 million. However, one thing sets them apart from the previous 2 profiles. In 2015, they made a very important decision. They took an additional step. At that time, they realized that they still have about 20 years to go before they retired, and they wanted to acquire one more asset. By then, Mr. Invest Pay can take over the loan of the condo they are living in. They saw that with Mrs. Invest's income alone, she could acquire one more condo and she can rent it out, have the tenant pay for the installment, and still have some cash flow. However, the ultimate aim is not the cash flow, but that the property will eventually pay itself off. So they decoupled the condo they were living in, and Mrs. Invest bought a new launch under her own name that cost about 1.2 million. The second condo will enjoy the same kind of price appreciation, and when 2035 comes around, Mr. and Mrs. Invest will have two condos which is worth 2.1 million plus each. In total, they will have about $4.3 million to enjoy a very comfortable retirement. From the above examples, you can see that it's really amazing how a single correct decision can change the trajectory of one's financial future. But how many of us really sit down and think about retirement and really take the time to plan? Most of us are just too overwhelmed by our everyday lives, and before we know it, it's much too late. So if you're wondering if you can follow the footsteps of the third profile, Mr. and Mrs. Invest, but you're not sure, feel free to contact me and we can discuss more. Meanwhile, take care and we'll talk soon.